we're in the zone where ahead of the US general election, we tend to see liquidity pick up. Janet Yellen tends to drain the Treasury, tend to drain the Treasury general account a bit because they've just taken the money in from tax season. We've got potential intervention. I was talking about this with Obi and Mando earlier on Rect Vision. Chance that they intervene by selling dollars, that will bring dollars into the system. There's lots of liquidity, rate cuts, all of these things to come. So we're coming into the liquidity cycle. The seasonality of this in crypto tends to be strong into about August, September. Then it goes choppy because of election, because nobody knows where it's going to go, what it's going to mean, and then tends to resolve itself after the election with the extended banana zone.
Now, guess who keeps his eye on us? The author of best-selling book Rich Dad, Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In today's video, Real Vision co-founder and CEO Raoul Pal shares his insights on the price action in Solana and why it could be entering the banana zone. Based on charts and data from his research at Global Macro Investor, Raoul provides valuable perspectives on what investors should look for next.
I'm actually not even going to try and time it. My idea is take some lifestyle chips off and then run the rest and try and buy the sell-off. I just think it's very difficult to do. It always looks good in theory. It's very difficult to do. And let's say you've grown your $10,000 and it's now $100,000 and the market then falls 80%. The probability of you putting your 100 grand stack back in is about zero because you'd be worried about losing it. Everyone will be throwing poo at each other online. You know, the US is looking like it's going to arrest everybody in the industry and you'll never buy it. So just, I really, really, really don't like the idea of, hey, it's just easier. Just sell the top and buy the dip. If you're very new to crypto, just hold the major ones. Try not to observe it, paper trade stuff. Do anything to stop yourself messing this up. You know, I use this don't fuck this up thesis. And big thesis is have 90% just in the majors and 10% you can play around with. But if you're so new, get a feel for the market, understand the volatility, because you think you can deal with the volatility and then you won't be able to, and you'll panic and do the wrong things. Just have your lessons first, learn it carefully. Liquidity is not about passing money from the banking system to individuals. It's a process of debasing the currency by introducing excess currency. We think that the Treasury run down the Treasury general account. We think the Fed stop QT. We think that the end of the reverse repo gets drained. We think that Fannie Mae probably gets congressional approval to offer equity release mortgages, home equity release mortgages, which could add trillions of dollars. We think that there's kind of either tax stimulus or fiscal spending stimulus to come. We also think that globally, the Japanese might intervene in their currency, selling dollars, which adds dollars into the global system. We also think that most countries will be adding liquidity as well. We think China needs to increase its liquidity. We also think Basel IV is coming next year, which means the banks buying more bonds. So we think there's a lot of sources of liquidity. Another one is commercial real estate. Eventually, if it remains ugly enough, the Fed could create a special purpose vehicle to put all these loans in. We've seen that historically in the past, particularly in the savings and loan crisis in the early 90s. That's another method of liquidity. So there's lots and lots of different avenues and ones we haven't even covered that they will look for any answer.
The cryptocurrency market, especially Bitcoin, has everyone on edge due to June's volatility and unexpected price swings. The key question is, what comes next? Where will we be heading into July? Historically, is July a bullish or bearish month? Moreover, when and where can we expect this bull run to conclude? Timing is always more critical in the market. On Crypto Banter's Kyle Dute's trading show, the analyst said that on the daily chart, there has been a minor pullback heading into the CME weekly close for Bitcoin. With the upcoming Bitcoin and Ethereum June closes, it's essential to look at July's historical performance. He said that July has generally been bullish, with 7 green months and 4 red ones historically. If June closes positively, July may see continued growth. In past cycles, after breaking all-time highs post-halving, Bitcoin experienced several months of continuous upward movement. For example, after the 2017 halving, Bitcoin saw about 8 months of growth before reaching the cycle top. Similarly, the 2017 cycle showed significant gains for 9 months after breaking previous highs. In the 2021 cycle, Bitcoin broke all-time highs, saw 3 months of growth, a pullback, and then a final top after 10 months. This pattern suggests an 8 to 10-month period of growth after breaking all-time highs. Currently, we haven't closed a candle at all-time highs post-halving yet. If this happens in July, we could see growth until March to May 2025. If we consider a scenario with diminishing returns, a shorter period of growth, we might see significant movement until January or February 2025. Looking at the timing cycle from the first top in the 2021 cycle, there is a potential continuation of this bull run into February or March 2025. Given these analyses, he said that one should expect continued growth for the rest of this year. The bull run isn't over. Simple technical analysis, like the bull flag pattern, suggests further upward movement. A significant measured move could see Bitcoin reaching the $100,000 to $120,000 range, doubling from its current price around $60,000.
Okay, you need to understand what drives the value of a cryptocurrency. It's driven by Metcalfe's law and network effects. Network effects are the number of users plus the total value transacted on chain, not the number of transactions. So XRP puts through lots of small transactions. It doesn't drive as much as Bitcoin, which puts through lots of lumpy transactions. I've looked at XRP against Metcalfe's law formula, and it always is accurately priced. So either we've not got new users, or in terms of new wallet holders, or the total value transacted is not increasing enough. It's as simple as that. So it really is, it's like it's not being used enough yet to drive it to the next level. Obviously, it has a lot of value because it has a lot of transactions on it, which is why it maintains value, but it doesn't increase value. Do you think it's better to hold until peak cycle, let's say Q4 2025, sell all the crypto for cash, buy the new higher low? This is the same question we've just had. Is like, I don't like that thing. I've tried to do it. I sold out at 2,000 in Bitcoin in 2017, having made a 10x. It went up another 10x, then fell 85%. When I rebought it at 6,500. If I just held the bloody position in the first place, I would have done much better. Don't be too cute. If you need to take lifestyle chips off, please do. But don't think that you can be a hero and top and tail the cycle. It's hard. It's really hard. Even Julian and I, who spent years looking at stuff like ISM, we know the business cycle, still doesn't make it easy to do something like that. So I would rather ride the cycle, take some off when you need to.
For those unfamiliar, the delta gradient measures the relative change in momentum against the true organic capital of a cryptocurrency. When the gradient is positive, an uptrend appears. Most times, this uptrend lasts 28 to 60 days. At press time, Bitcoin's downtrend was minus 2.34. This negative reading implies that the price might continue to undergo a downtrend. Also, this projected downtrend could last a similar duration. This metric shows the value of transactions that have realized a profit or loss in recent time. A positive reading of the metric implies that profit-taking is high. As such, this could cause prices to fall. However, if the metric is negative, it implies that there has been a surge in realized losses. If it is intense, price may begin to climb. According to Sentiment, Bitcoin's network realized profit/loss was minus 1.92 million. This implied that a chunk of the transactions on-chain ended in losses. Typically, this decline is expected to foreshadow a price increase, but that might not be the case due to the dwindling activity on Bitcoin's network. At press time, the 24-hour active addresses was down to 694,000. A few days ago, it was almost 1 million. Active addresses is a measure of user activity. Thus, when it decreases as it has done in recent times, it means that market participants are not interacting with BTC at a high level. Consequently, this could lead to a notable decline in demand for the coin. Should demand continue to decrease, so will the price. However, analyst Michael Van de Poppe opined that BTC's correction might soon be over. According to him, the recently concluded week was good for the coin. He said, "A pretty decent weekly candle for Bitcoin is approaching here. I would expect the correction to be relatively over. We didn't get the most obvious steep corrections in previous cycles either. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.